In this video, I'll be sharing with you 7 dividend stocks that pay me over $500 per month. I've been really getting into dividend stocks this year simply because of the way the market is trending, as we're seeing a rotation out of growth stocks into more stable stocks and stable companies. Many of these companies pay great dividends, and I really love the passive income that's generated by owning these stocks. If you're looking to increase your passive income streams, dividend stocks could be a good way to do so. Before we get into my list, I'll go over what dividends are and why companies pay them. This part is really important, so you don't want to skip it. So why do companies pay a dividend? So in very simple terms, when a company makes a profit, they need to do something with that money. Companies usually have a few options. They could take the money and reinvest it into their business to create better products. Another thing the companies can do is take that profit and pay back their shareholders in forms of a cash dividend payment. So you as an investor just holding the company's stock, you'll get paid a cash dividend payment usually every quarter, and over time, if this compounds, the effects can be really amazing. One mistake I personally made when I started getting into dividend investing was I only chased the highest yields possible, so like 10 to 12%. But you're going to want to be a little bit careful with this because that's what's known as a dividend trap. I personally think that any yield above 5 to 6% should ring some alarm bells in your head, simply because the company could be not reinvesting money back into their business, or they're simply just paying out too much dividends to their shareholders. Now, I'm not saying a high yield dividend stock is bad, but anytime you see a dividend stock with a yield above 5 to 6%, you should do a bit more research. Before we get into the video, don't forget to smash that like button and subscribe for more future videos. The first dividend stock in my portfolio is Abbvie. Abbvie is a biopharmaceutical company that has a wide range of products in various sectors such as neuroscience, immunology, and oncology. And this stock currently has a dividend yield of around 4.01%, so you would be paid $5.95 per share you own per year. Now, you might be thinking that you've never heard of Abbvie before, but you might have seen a commercial online for the drug Humira. This drug is basically a drug that reduces pain that's caused by arthritis, skin conditions, and Crohn's disease. Humira is one of the best-selling drugs ever, topping the best-selling drugs list every year, and in 2021, the sales for Humira was over $19 billion. Now, why am I buying Abbvie even though I know that the American healthcare system is so broken? Well, Abbvie is really just a company that's well positioned in their sector through their leading patents, their investments into research and development, which means they'll have a diversified product mix moving forward. Right now, the operating cash flow for Abbvie sits at a monstrous $24.9 billion, and the $5.91 dividend is really nice, which means that if you own 100 shares of Abbvie, you would make $591 per year. The next stock on my list is none other than JP Morgan Chase. This is one of the largest and most successful financial institutions in the United States, and they currently have a 2.92% dividend yield, which means that you would make around $4 per share that you own per year. Now, 2.92% isn't the highest yield, but it is compared to the benchmark of the S&P 500, which pays around a 1.6 to 1.7%. Dividend yields are just a lot lower than when I first started investing, simply because the price of the share goes up, and if the share price continues to go up and the dividend stays the same, the dividend yield will drop. The main reason I like JP Morgan Chase so much is because they have a lot of cash on their balance sheet. They have around $1.7 trillion in liquid assets and around $700 billion in cash. So as a shareholder of JP Morgan, you can feel confident that they're not going to go bankrupt. I think JP Morgan is very well positioned in the financial sector, especially due to interest rates going up. And as the interest rates go up, banks will profit from this simply because they could arbitrage the interest rate that they give to their customers. I think one of the most important factors when investing into a dividend paying company is security, simply because if the company goes bankrupt, they are not going to be able to pay you a dividend. JP Morgan Chase did not go bankrupt in 2008, unlike some other financial institutions, and they have a lot of cash on their balance sheet, which makes them stable for a long time. That's why I like having JP Morgan Chase in my portfolio. The next dividend stock in my portfolio is probably a stock you're very familiar with, and that is PepsiCo. If you're somehow not familiar with PepsiCo, PepsiCo is a company that sells soft drinks and other beverages, but they also own Frito-Lay, which is a consumer packaging company that sells potato chips. The current dividend yield sits at around 2.6%, so it's pretty in line with JP Morgan. Now, the biggest debate for Pepsi is, why do you own Pepsi over Coke? Now, that's a valid question simply because Coke is a great company with a great dividend as well. But in my personal opinion, I like PepsiCo a little bit more than Coke, Coke simply because of the product diversification. Coke sells beverages, but PepsiCo sells beverages and other items such as chips with well-known brands including Doritos and Cheetos. These products like chips account for around 20% of their entire revenue, which is a great thing because it means that there's room for growth with the diverse product mix. PepsiCo is really a company that's going to be here during my lifetime and throughout your lifetime simply because they offer products that have such high demand. The next stock in my portfolio is Exxon Mobil, and this could be a little bit of a controversial stock simply because it's not very green, and hopefully oil isn't something we're relying on in the next 30 to 60 years. But as of now, the demand for fossil fuels is actually very high. Refined oil products such as petroleum, gasoline, and heating oils are still very expensive, and companies like Exxon Mobil are raking in the profits. Exxon Mobil currently has a 3.38% dividend yield, which means that they would pay $3.64 per share you own per year. And in the past year, they're up around 24% compared to a company like Amazon, which is only up around 4%. Exxon Mobil also makes for a great inflation hedge because if you look at any CPI reading, the sector that always goes up in price is energy, which Exxon Mobil is in. Oil is pretty much used in everything, the machines that harvest your food, your cars, and etc. Now we are starting to see a trend of transition into more green energy, but fossil fuel dependency is still very high and it won't be going away for the foreseeable future, so Exxon Mobil is a company that's well positioned to take advantage of this. The next stock in my dividend portfolio is Kraft Heinz Co. You've probably heard of Kraft Heinz. They're really famous for making their condiments such as ketchup, mayonnaise, and mustard. Now they don't only make the condiments, they sell them, and they have a net sales of around $26 billion. Kraft Heinz has a strong dividend yield of 3.93%, which comes out to around $1.60 per share that you own per year. Now another reason why Kraft Heinz is so reassuring is simply because Warren Buffett, a billionaire and one of the best investors in the world, holds Kraft Heinz in his portfolio. The fact that Kraft Heinz provides a consumer food staple product as their main offering shows that this company really is a good long-term buy because food is not going anywhere and we'll always need food even in a recession or tough economic times. The next dividend stock in my portfolio is none other than Johnson & Johnson, and this is a stock that Warren Buffett also holds, which makes sense. J&J currently has a 2.94% dividend yield, which means that you would make around $4.75 per share that you own per year. J&J is one of those stable companies that will continue to thrive even during a recession or economic downturn simply because of their product lineup. Products such as Tylenol, Band-Aid, Clean and Clear, and Listerine. Now this company really is immune to any type of economic downturn simply because doctors will continue to prescribe Johnson & Johnson products. Johnson & Johnson is a dividend aristocrat, which means that they've been paying dividends for the past 50 years to their shareholders, and they've continued to increase their dividends as well. J&J has a massive amount of cash on their balance sheet with very little short-term debt, which is a great indicator for a very stable company. The final dividend stock in my portfolio is none other than Home Depot. Home Depot is pretty much one of my favorite dividend stocks ever, and it's a great place to go if you need any home improvement needs. Home Depot is one of the largest home improvement retailers in North America with revenues of $157 billion and over 2,300 stores. Half of the revenue comes from professional contractors and half comes from customers. They are extremely profitable with 33% gross margins. Another reason I really like Home Depot is because in the US, there's still a high demand for new homes being built, and as the demand for new homes being built continues to go up, what will people do? Spend on home improvement. Now who benefits and profits from this? Home Depot. So Home Depot pays a 2.89% dividend yield, so you'd make around $8.35 per share that you own per year. Home Depot really is a company that will remain as a pillar in security and stability, and Home Depot and their competitor Lowe's have outperformed the S&P 500 and the Nasdaq for the past 10 years. Dividends can be a great source of passive income, and the biggest takeaway that you should take away from this video is that all the companies that I mentioned in today's video will provide a stable dividend all the time. That is it for today's video, guys. Thank you so much for watching. If you're new here, my name is Paul and I talk all things money and personal finance. So smash that like button and subscribe for more. Your life is a masterpiece, so let's unlock that full financial potential together. Catch you guys in the next video. Take care.